Coming up in this show, I'm going to bring you my opening comments on the markets. Katie has trade planning with options. She's going to show you analysis in Boeing, doing an option strategy you'll find interesting. Arvi, he's going to look at stock sectors, and he's going to bring you analysis of the casino stocks. And I'll bring you my multiple time frame analysis in the SPY, the stock market, looking at the market condition monitor. That's our MCM Pro and our ranking system. And I think you're going to find that incredibly valuable.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks. And hopefully, there's lots of great ideas and opportunities for you throughout this show. Well, the stock market chopped around early last week, with investors waiting for the big earnings report out of NVIDIA, which was due Wednesday after the close. While trading in a range, mostly on Wednesday, we saw some selling come in as SMCI collapsed, stock down over 25% as they've delayed their K10 filing. That means there's probably trouble ahead. And that stock made a high in March of 1229, trading as low on Wednesday as 387. What a nightmare there. That did hurt the semiconductor stocks and the tech stocks, but what was down 66 points in the S&P 500 early in the day on Wednesday finished only down 33 as short covering came in before the NVIDIA earnings. NVIDIA earnings came and they beat, but their guidance was not what the street wanted to hear, and they still have issues with their Blackwell chip, so the stock got sold. Tried to bounce back, but then got hit very hard during the day. As NVIDIA stock sold off on Thursday, the broad market actually did well, and that was surprising action, as there was very solid breadth, and the market rebounded, and it was a very nice day on Thursday. But NVIDIA overall kept the techs weaker, and all the gains were lost by the end of the day on Thursday, as that S&P 500, well, it kind of flinched as it approached that all-time high. Friday, buyers were back in early and anticipating the Fed's favorite PCE deflator, which did come out pretty much in line. The markets didn't really react to it here on Friday. And there was some very good inflation numbers out of the Eurozone, which gave the markets an early lift. And that's basically where it's been all day long, with the S&P 500 back and forth between up 20 and up 30, just some choppy action here on Friday. So the stock market remained strong as the S&P 500 got very close to the all-time high that we saw in July. And though the Magnificent Seven stocks are struggling, and their star NVIDIA really stumbled, breadth is improving, and flows into small caps and value is a positive and very apparent. We're seeing that solid breadth a few days in a row. So with positive momentum, we must give credit to the bulls. So right now, I'm going to speak to investors. Still, with everything I just said about the positives, the upside is limited by valuation, and that is a theme I keep bringing. We're going to look at a couple of slides here that I think are very important for you to look at, and I hope they strongly resonate with you. This is brought by Mark Hulbert. This is Stock Market Valuations. This looks at 9 different ways to look at the valuations of the stock market. This was a great chart. Mark Hulbert is fantastic. He's been around, of course, for decades. And this looks at the PE ratio, and this is the last 12 months, the PE ratio, the next 12 months, the CAPE ratio, the dividend ratio, sales rate, it's price to dividend, price to sales, price to book, the Q ratio, the Buffett indicator, of course, average household allocations to the stock market, and the S&P 500 divided by the money supply, which is very important to look at. Here you could see, as it makes the comparisons to 2000, which was, of course, we know the dot-com bubble peak, to 1970, which is an era time frame that I have made comparisons to as far as the peak of the secular bull market back then, in 1950. And you can see in here, this is crazy as you look at this. These valuations here by the PE of the last 12 months, well, in the 80% to 90% category of the all-time high. And of course, 100, as you see listed down over here, is the most bearish. So when it is an extreme of valuations, the PE ratio, it only has it for the next 12 months back to 2000, 100% right now is what it's valued at. The CAPE ratio, 96%. The price to dividend ratio, 98%. 98% for price to sales. 100%, in other words, a record level for price to book. The Q ratio at 100. The Buffett ratio, 98, 99%, as you can see, as it's at 197% of market cap to GDP. That's only was surpassed by the bull market peak that we saw at the end of 21. So extremes, average household allocation to the stock market at an extreme, and the amount and the stock market valuation based on the money supply out there, 100%. You can see what this means comparing it to the dot-com bubble time, that it is basically at record valuations. When you get to those kinds of levels, yes, you can still get to higher levels. However, the risk rewards are terrible for the long side, and you're very, very likely to get into a period of high volatility, big downside moves with very, very limited upside potential left. There are people out there, and there are many fund managers and many analysts that are saying, well, you have to have a buying panic first. You have to really set the hook. You have to get 6,000 on the S&P 500. You don't have to do any of that. It is possible that you get to those levels. I would never say something's not possible, because one extreme gets passed by some other extreme. And I've been around for 50 years, and I've seen these extreme times come and go. Of course, that 1970 period was marred by a very, very high inflation rate that brought a lot of bear markets that were after 1970 to the secular bear market low in 1982. There were a total of 5 more bear markets that followed during that period, and that's the kind of period that I think we're in right now. Let's look at the next slide. What supports this kind of move? I mean, how did it really get there? And you can see here, well, this is, let's give credit to Advisor Perspectives. That is an amazing site, and it's really worth you going to see. This is Investor Credit and the Market. And what these red areas right over here tell you where investors dipped into a lot of margin money. And you can see in here the tech bubble right over there. You can see in here the peak in 2007, before the great financial crisis. And then, of course, you get forced liquidations, and all of a sudden they have positive money in their accounts. They're not borrowing a lot because they're scared to be in stocks. And then at some extreme, you get to where they're willing to buy stocks again and get into more debt. Look at this right over here. Of course, the influence is zero interest rate policy and stupid spending by the government. And you can see in here, this is October 21, where they went into massive massive debt to buy the stocks, and that peak made right over there and the 20-something% drop here in that bear market. And look what they're doing now. This is what fuels the bull market when they are so complacent, so willing to go into massive debt in their brokerage accounts to buy on margin, and that helps lift the stock. And of course, with tons of buying coming from fund managers because they see the potential easing by the Fed, well, it's not going to make a lot of sense to me that they're going to do a ton of easing when the stock market is at all-time highs and you only have a small uptick in the unemployment rate, and you have the inflation rate still sitting about 2.9%. So all of the hope for a big decline in interest rates is ridiculous unless we get into a big recession. And of course, the stock market is going to be getting slammed if that happens. So the right now you can see what has brought us to this kind of valuations right over here. The government, the Fed, all of that spending, and all of this, the hook that's essentially set up for investors because they're willing to go into massive debt in their brokerage accounts, take on tons of margin debt, and these are the conditions that get set. And this is what sets up very, very big declines in the stock market. So let's just, before we go over there, let's just talk about this a little bit more. So I've, basically shown these kind of things in the past, and we are, certainly, in my opinion, coming near the end of a secular bull market. And I've talked about that a lot. And showed some very long-term charts on that. To me, the period of the peak in 22 to 2035 looks a lot like what I think happened in 1968 to 1982, which were secular bear market periods. There were 6 bear markets in there, 6 bull markets, and huge volatility. So for me, I think we're near the top of the range, and with these crazy valuations, I think ahead are 40 or 50% wide swings in the next decade. Yes, that would be the range I'd look for, 40 to 50%. Those are big declines with a lot of bear markets. And I think all of this are solid reasons for investors to lower their exposure now and in coming months, because I don't quite think the top is set in, though I'm looking for a sizable decline pre-election. Speaking to traders, now that was all about speaking to investors. Speaking to traders, I have to give credit to the positive momentum conditions that all of our work is showing, and I'll show you that as we get to the end of the show, and also encourage you to put a strong focus on the rotationary conditions that we're seeing in the market now, as this breadth expands and money moves into small caps and value, and we're seeing positive action, especially in that Russell index comparatively, while the NASDAQ is actually lagging a bit. I'll show you that also later on. So I think that this market for traders that we're in has got opportunities on both sides. And being really tuned in to what's strong and what's weak, I think it's going to help you a lot. I'll show you how to do that later on in the show also. But I really want you to know that I believe strongly that there is a lot more volatility coming ahead, and maybe soon. So prepare for some very big swings. Again, for the stock market this week, we'll say it's kind of mixed to slightly lower. The Dow Jones managed small gains right now. Bond market down small, so it wasn't a very volatile week in most of these markets. The 10-year yields pop about 5 basis points, and I think there's more bounce in yields ahead. There's if you watch Future Speak, which Arvi does a phenomenal job on, you'll be able to get all of that analysis. And we're looking for a bounce in yields, a pullback in the Treasury market, but temporary. So gold about even on the week, silver down about 30 cents, and a mixed week for the metals markets. We've been super bullish there, and especially in the gold market, and that has not changed. We expect that the dollar will have a bit more bounce coming as yields do rebound a little. The dollar rebounded about 0.7% this week. There's probably some more of that ahead, and that probably will get the metals giving up a little bit of ground in here. But again, I really think the metals are super strong. Oil range bound in kind of a wide range. I think there's trouble ahead, down over $1 this week. But I think there's big risk in the energy market through year end. And again, watch that Future Speak show that Arvi does on Wednesdays. It is phenomenal. You're going to see our analysis on 24 of the different futures contracts and indexes, and it's super valuable. So that's for levels 2, 3, and 4. I do encourage you to become a premium member if you are not. Again, here is that massive overvaluation right there, as you see by 9 different readings, and the willingness to take on massive debt in order to inflate the stock market valuations, which are now at these absolute records. If you're new to askSlim, get acquainted. Sign up for our Snapshot Lite. It's free. Just go to our free stuff link up on the top of the page and sign up for that. On YouTube, subscribe to the channel, click the notification bell, and do like this video. Give us that thumbs up. And also on X, follow us at askSlim. And if you have questions about what we show you in here, about our memberships, or about our huge offerings of education and analysis, phenomenal things that we have, write to Matt at askSlim.com, and he'll be able to help you with that and even set you up for some first-time membership specials. So write to Matt at askSlim.com. This is Trade Planning with Options. Katie's going to share a neutral strategy in options in Boeing. Great analysis she shows as she combines cycle analysis with option strategies. And she's going to show you how to open an account at Tasty Trade, that phenomenal options platform, really the best, I think. And you can open that through askSlim.com, and we get credit for that, and you're going to get specials for that. So please do consider opening up that account. Okay, so Katie, show them this great analysis.
Hi, this is Katie with askSlim. This is Trade Planning with Options on August 29th, 2024. We're going to look at an options trade idea in Boeing. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email Matt at askSlim.com. Let's get an overview by first taking a look at the weekly chart of Boeing. We do have an average cycle length of 32 bars with a weekly cycle timing window shown by these vertical blue dashed lines that is coming up between November 25th and January 3rd. This previous cycle was negatively configured, ending lower than where it began. The reason that's important is because when that happens, we're unlikely to be able to take out the prior cycle high. We created a resistance zone using that prior cycle high and that recent cycle low, and that is this area in the pink boxes here. Boeing got up almost as high as the bottom of that resistance zone a couple of weeks ago and backed off from there. Now, momentum, as shown by our proprietary reversal scout, also turned back to negative and remains negative. The reversal scout is this green and purple ribbon on the chart. So this is just chopping sideways between the bottom of that resistance zone at about $200 and the cycle low support around $160. With negative momentum, we have put in a few more price levels below in case Boeing does break below this cycle low support. The next level down is the intermediate 50% extension at about 143. Switching over to the daily chart, we'll take a closer look. Here we have an average cycle length of 35 bars. This is our previous cycle low, and because that cycle was negatively configured, we created this resistance zone right here using that cycle peak and this recent cycle low. So Boeing rallied up into the middle of this resistance zone on an improvement in momentum, with the reversal scout turning green and the slim ribbon, which colors the candles red, green, or gray depending on momentum, that slim ribbon improved from negative to neutral. Our daily cycle timing window is expected between September 24th and October 3rd. So this looks like more sideways chop. We're going to be looking at a neutral trade strategy, and we're going out into the October time frame to align with this timing window out here. We're going to be using the following levels. On the upside, the 78.6% fib at 190. And the downside 78.6% extension level is at about 153. We're going to go over to the tastytrade platform. You can open an account with tastytrade by going to the askSlim homepage, hovering over that Partners tab, and clicking on tastytrade. On this page, you will find our affiliate link, and using that link helps us, and it also helps you with a special bonus. So please do check that out. And now let's go over to tastytrade. Boeing has a relatively high IV rank of 43.7. That's perfect because I mentioned that we're going to do a neutral trade, and that's easy to do with short premium strategies. So let's go into this October 18th expiration cycle with 50 days to go. Now I'm going to set up a strangle, which is the sale of an out-of-the-money call and an out-of-the-money put. On the call side, let's sell that 190 call that aligns with the 78.6% fib from the daily chart. And on the put side, let's sell that 150 put that aligns fairly well with the 78.6% extension. Notice that this skews slightly bearish with close to 11 short deltas. Our max profit is the credit collected, $395. You can see your max loss here. It's infinite to the upside and defined by 0 on the downside. Our probability of profit is 72%. In my account, this uses just over $1,700 of capital. Yours may differ. If you want to cut down on that capital requirement, you could turn this into a defined risk iron condor by buying further out of the money wings to define your risk. Now you could go as wide as $15 wings, any wider than that, and you'd actually be using more capital than the strangle instead of less. So if you did a $10 wing, you'd buy the 140 put and you would buy the 200 call, and you would still be collecting a decent credit. Going back to the strangle, let's take a look at that on the risk graph. This is what it looks like. Our profit zone is here in green, and we just want Boeing to move around in between our strikes. That is our options trade idea for today. I'll put this in the options trade idea tracker, and we'll do a follow-up video next week to see how we're doing. As always, you can reach me on Discord or via email to katie@askSlim.com if you have questions or feedback.
This is Stock Sectors, and Arvi, another one of our just exceptional professionals who understands cycle analysis as well as anybody. He's going to bring you the analysis on the casino stocks, which are negative now. And you're going to see the amazing multiple time frame analysis on these stocks and the example of the principle of commonality. So if you take our cycle analysis workshop, which is you can see a video edit on it at the top of our front page. Go to the workshop tab. The principle of commonality is one of the 8 principles that we teach in that. And what that looks at is how similar stocks have cyclical patterns that look very similar to each other. And you can learn a lot from looking at those different symbols within a particular group or looking at indexes. And that really helps you with understanding. So Arvi is going to show you that, and think about that, the commonality that you see when he looks at that. He does a great job of showing you that. So Ari's going to bring that to you right now.
Stock sectors, casino stocks for August 29th, 2024. This is Arvi Ramachandran. So in this video, we are going to do a mini stock sectors on the casino stocks, and we're going to highlight what we see as a bearish view here on the intermediate term. with an important low that's not due out until the fall. For those who are new to our work, a stock sectors video highlights either sectors of the market or a specific group in the market that we believe either has upside or downside. This is a very important video for us, which we do every other Tuesday for askSlim level 2, 3, and 4 members. So if you would like to join us and watch these videos and watch the hundreds of videos that we have done over the years, please go to askSlim.com and sign up for a level 2, 3, or 4 membership. So as I said, in this video, this is going to highlight the casino stocks. We will look at 3 stocks in this video, as this is a mini stock sectors video. We will look at MGM, Wynn, and Las Vegas Sands. So with that, let's go ahead and hop in, and we'll look at MGM first. Okay, so this is our both weekly and daily cycle analysis for MGM. Now, MGM has been in a bearish mode ever since we lost on the intermediate term this key weekly low that formed on 5/27 at 38.03. If we go ahead and hop into the weekly chart, you will see that this dominant cycle has now turned down in MGM. That says that the dominant energy is pushing down. If we then zoom in to that minor money flow pattern, you can see that that formed low right when we saw that panic low in the early part of August. We then got a rally. But unlike some stocks that we have seen in the market, which have seen sharp moves back to highs, we are simply not seeing that in this group. This is only really looking like a bear flag that is poised to have another hit down. Now, we have a trough that is due on the intermediate term, 9/16 to right around 11/11. So highest odds on the intermediate term is that we would see one more move down, likely down to at minimum this 127.2 fib at around the 34.20 level. If we jump over to the daily chart, this is really not a great picture in MGM. What I like about this on the downside is that we have this bearish move on earnings that then sold off, got a bounce, and we have not really traded much into the gap, and we are already rolling back down and are in this short-term corrective period with a trough that is due 9/12 to 9/24. Now, what I want to highlight is actually when that next trough is due. That next trough is due right around that middle to end of October time period. Keep that in mind. So that says likely that we would see the intermediate term trough form only out at least into that next trough. So there are good odds that this next bounce would likely fail here on the upside and it would turn back down. Now, in the short term, what are we looking at? Upticks here would in all likelihood form a bear flag. We would look for a failure in this zone from 38.70 to right around 40.30 and then move back down into that 61.8 to the 78.6, 36.08 to 34.81. So that's our short-term look here in MGM. If we jump over to LVS, you will see what's going on in LVS. It is obviously weaker and very likely to trade back into that low that formed in the early part of August at 36.62. There's a trough that is due here 9/23 to also 11/25. This is a left-hand translation with a high formed early and we have turned down. If you want to learn more about cycle structures, as always, please take Slim's cycle workshop. He did a fabulous job really outlining his process that he has honed and crafted over now what is 50 years of trading. So just a wonderful way to learn about a process that is so unique, as many of you have seen over the years. On the downside, as I said, very good odds of a move down below this old low at 36.62, and the base of this zone is right around 36.20-ish, and we'll be looking for a move down at least into that 36.20 area. If we jump over to the daily chart, again, just like MGM, very likely to see waves on the downside. In the short term, there's a trough that is due 9/10 to right around 9/23. That next trough is due right around, again, middle to end of October here as well in LVS. In the interim, if we see rallies, they are likely to fail, and we look for it to curl back down, fail in this zone from 40.24 up to 42.40, turn down and easily move through the 61.8 at 38.53. There's a 78.6 at 37.69. So we will be watching for one more hit down, a rally attempt, and then a failure again into that later part of October time period. Finally, if we go ahead and jump over now to Wynn, that's WYNN, of course, also extremely bearish. Every uptick here has been failing for months, and we are not looking for that to change because we are in a left-hand translation a very ugly left-hand translation at that, where we had just a 2-bar rally and then a sell that is not likely done. There's a trough that is due 10.7 to right around 12.2. We're looking for a move down to the 161.8 fib, around 67.80 or so. If we shift over to the daily, also ugly. Now this is a longer 60-bar dominant cycle and then half cycles that are 30 bars. You will see that this trough has a low that's due right around when we have lows that are due in both LVS and WIN, right around that middle part of September. We would be watching for an uptick, and that will likely create a wonderful shorting opportunity for another move down into when that dominant trough is due, which is also due around the later part of October. You are seeing a synchronicity of lows, meaning when we have multiple stocks which are due to form troughs around the same time period, that indicates there are at this point very good odds of a move down into that later part of October in this group as a whole. Now in the interim, as I said, we are likely to see waves on the downside. So rallies up here into that 76.30 to right around 79 area are likely to fail. Watch for it to curl down towards the 78.6 at 73.30, and then this will low at 71.63. If we see a move like that, we'll look for another uptick, and then for this to curl back down, and then we would be targeting that 161.8 on the downside into the later part of October. Okay, so that's a look there at Wynn Resorts. All right, guys, so that is a look here at this mini stock sectors video for market week. As I said earlier, if you would like to see more of our videos, please go ahead and sign up for an askSlim level 2, 3, or 4 membership to really get a feel for what we do. And obviously, if you like what we do, we have higher levels of membership also available to you, which you can, again, learn about over time as you look through our services. As always, if you have any questions or comments, feel free to reach out. Thanks again, and hope you guys have a great day.
Okay, stock market analysis, projections on the S&P 500. First, some important information. Please do read this slide that tells you about our approach to analysis and about when you use our analysis, what it means for you and how you should do that, and the concept of trade ownership, which says you should own your own trades, no matter what anybody says. One more thing before I get into the analysis. This week, we bring you our Level 4 Top Tier Special Trial for first-time subscribers and for people that are upgrading. This brings you everything that is in our Levels 4, 3, 2, and 1. It is unbelievable the amount of information you're going to get from us. Starting for Level 4s with our multiple time frame charts, our entire focus list of 84 symbols. You can import that, save it, look at it live on the TOS platform. We encourage you to use Thinkorswim platform, but you don't need that with everything that we bring to you, and you can certainly move the analysis onto whatever charting platform you like. You get our proprietary studies on there, the Slim Ribbon PO, Reversal Scout, Market Condition Indicator, Option Bias Indicator, all of those that we develop that help our traders immensely. You can import, save that all live on the Thinkorswim platform. You will get our custom grids that allow you to look at basically any symbol using that special chart grid with our best indicators. Fantastic. And you're going to have full membership access to the MCM Pro and everything, as I said, in levels 3, 2, and 1. And I want you to go to the top of the askSlim page and look where it says a level 4 special, get 35% off. You're only going to pay $303.75 for this for 3 months. It's $101.25 a month versus the regular $159 a month. So this is, in those 3 months, you're going to get just a phenomenal look at everything that we bring to you, and you're going to love it. Again, go to the top of the askSlim front page, as you can see there. Yes, that's a picture of me holding my hands up, screaming in 1974 on the original trading floor at the CBOE. Yes, been at this for 50 years, and now I've shared all of that information, all of that training with my other 3 analysts here at askSlim, and fantastic information. Go to that level 4 special offer. There's more information there. And if you want to know more and get some information, or if you have trouble signing up, write to Matt at askSlim.com. Take this 35% off for everything that we bring you. You are going to be blown away by how this information just is fantastic for you as you approach trading or investing in the markets. Level 4 special, 35% discount. Go to the top of askSlim.com. All right, here's my analysis on the stock market. We're going to look at the S&P 500, the SPY, and we're going to look at our level 4 indicators. And then I'm going to bring you to the MCM Pro. That's our market condition monitor and our ranking systems. We're going to go in there. These are two fantastic applications that really give you a good sense for the conditions of the individual symbols in the markets or the market as a whole. And especially in a time now where I think rotation is the word for the stock market. For traders, you really want to know what's strong, what's weak, get informed about that. And that's what's so important about these two applications that I'm going to show you. So let's take a look now as we look at the S&P 500. So this is SPY. We're looking at weekly, daily momentum, and the 2-hour chart right over here. The 2-hour chart, I have some cycle analysis on there for our level 4 members, so they're the ones that get the cycle analysis on the intraday. And as I remind the level 4 members, they can ask for that. It's really interesting now. Let's maximize this cell right over here, and let's look further out, because what I want you to see here is the incredible cyclicality that we have here in the market. As I go back here to the end of 21, 22, back over here, these are cycle brackets. If this is the first time you're looking at this, you're going to say, what are those half moons or what are those semicircles on the bottom? These are simply a guide to help us see the rhythm in the market, the average time frame in a particular symbol. Every symbol has its own time frame. And based on what I suggested, when you look at Arvi's video on the gaming stocks, earlier in the show, we talk about the principle of commonality. So there's a lot of commonality between the indexes as the cycle rhythm set up. Cycle rhythm being money flowing in, money flowing out, and the longer a particular cycle, the more dominant it is. So there are some minor cycles in here, and they don't have a lot of influence if the dominant cycle is fighting against them. In other words, in a very strong upward move, as you have right over here, these minor cycles don't give you much on the downside. And the slim ribbon, the reversal scout right over here, which you see, where you see that green arrow, that's where that turned up right over there. That tells you the strong upside momentum in the market. Now, you had no downturn here over there. You had no downturn here. This is in 23. This is in early 24. And you had no downturn over there. So the depth of the minor decline wasn't much. Here you had a downturn in the reversal scout, and it was deeper right there. Here you had a very big early downturn, and that was a very big decline with two minor cycles negative. But if you look here, minor cycles both positive, both positive, both positive. Now, when you look at this one, this was that yen crash and the crash in the Japanese market, and that brought it down close to the 78.6%, which got me more negative. When then this comes back past the 78.6% on the upside, and then we have an upside turn here, then it tells me that, well, I was overly bearish and this was an anomalous downside move. Let's talk about where we are right now and these particular conditions on the intermediate. This is looking at the weekly chart here. So we have us in this minor rising phase. And because it rallied so strong, it tells me that the dominant phase is still rising. That has me looking at, well, I talked earlier in the show about the extreme valuations and the potential upside. So to me, the potential upside is limited based on valuations. However, based on the overall analysis, it says to me we have to still be looking to the upside. And that says to me that somewhere in this period here, and I'll show you on the daily chart where I think that rallies to, you continue to move up. Resistance being at the old high at on SPY at about 565. So we're only some 4 points from there right now. The bottom of this fib extension, which is at about 567. So that's a pretty narrow range there, and that is where the lowest track is, as you can see. Now there is an upper track in here takes you to this extension, which is 100% extension. In other words, what that means is that the length of this rally, the magnitude of this rally, not the length, the magnitude, will match the magnitude here if it gets up to that level. That would be 582. To me, that is the outside of where this rally can go if it really manages to get legs. That would be about 202 or 203% valuation of the stock market to the GDP. That would be a huge extreme that it has never achieved before. But again, never doesn't mean it will never do it. We could get a rally up to that level if it is especially driven by a rotation. That could happen. Here is your period of risk right in here. And now I want you to go back and look at those periods of risk as you look here. And you can see in every one of those cycles, the declines are pretty strong. You have some that are bear markets and get you down, over 20% as you see over there. And you have some that are just intermediate corrections that are basically, 6 to 15% to the downside. So right now, because I've upgraded this from where I had it, because the market told me to by the strength, I have it projected to the period of weakness coming in here, getting it down to this level sometime pre-election or after the election to about 514 to down to this level where it made down over here where the 78.6 is to 509. So let's just say 510, 515 on the downside. That would probably be, somewhere between, 9 and 12% to the downside, depending on how extreme it gets. That wouldn't be that rare. In fact, it would be quite normal. And this is that period of risk, as you can see here. In all of those cycles, they come and the market falls. And now, as we're getting up here to this extreme level, in my opinion, the upside is quite limited. So, I see a potential. If at an extreme it can rally another 2-3% compared to just on the intermediate phase here down about 9 to 12%, I'll make it 3 to 4 to 1 negative risk reward based on the magnitude of potential declines that we can see in here based on the weekly chart. Now again, we have an upward turn here in momentum, and I will show you that upward turn again as we look at the daily chart and some of that momentum. Another key thing to see is that generally when the market breaks, it gets below the 34-week moving average. This one did not. It was a very strong translation, as you see there. And most of the time it will get to do so. So you can see where that's moving up right out over here. By the time it gets into this period of risk, it's at about 532. So that's only 28 points down right there, a couple percent, few percent. So that's not that big of a decline, but still, that's probably a best case for that decline. But I don't see it being able to hold up that much. So let's take a look here as we switch over to the daily. And again, we are looking at cycle analysis. So look at this cycle in here. You've got this breakdown here. When it got underneath this support, it just collapsed, influenced by Japan. Now, when we look at those cycles, you can see how clean these are in here, and you can see the slim ribbon right there. Excuse me, I have a cough. And here's where they turn negative right here. You had the reversal scout turn down, and that gave you a good advanced lead to the fact that the market was going to make a peak in there. Now, if you look at this cycle looks like these over here. So you can see this is translated to the peak way on the right side. That's a right-hand translation. Translated to the peak way on the right side. This one was slightly on the left side, broke the low. So you can see how different these are here. And here you could see momentum still strong on both of our momentum indicators, the reversal scout and the slim ribbon, as you could see there. That gives you a good sense for the strength in the market. And look at the shape of this as the peak comes on the right side of the cycle. That is right hand translated. When you get a right hand translation, it only leaves a brief time for a move to the downside. This points to a move to the downside, plus or minus, I'm just going to duplicate this so you can see, plus or minus about 3 bars. So somewhere in this time frame right over here is where this trough is likely going to be. The midpoint of that is 9.9. We pegged this midpoint exactly as I called for that 8.5 trough right there. Now we're looking at around 9.9. It's, really about, somewhere around 9.6 to about 9.12, 9.13 is where this trough is likely to come. So the probabilities of a pullback in here are high, but it's only minor, and maybe only to this 23.6%. That gets you to the next rally right over here. Now that tells you that, the conditions are such, because these are all positive. Everything here, I just told you 3 positive things. I'm going to tell you a 4th one, and that is down over here, our option bias study. This tells you how to direct your option positions. The reason I developed this is because way back when I'm a trader for 50 years in options, and also when I was, doing a show on Tasty Trade, based on option strategies and so much of that talk of options, I saw traders getting run over by the market in their option position. So I wanted to develop a study that helped you avoid that, so you wouldn't get run over doing butterflies or negative positions when the market was positive. And here it is positive again, telling you bias your positions to the long side. So that's 1, 2, as far as this shape goes, as bullish, and momentum conditions as bullish. That all says to me that when you get a minor pullback in here, then the next rising phase is likely to get above these levels. And then you start to run into the resistance levels that I talked about here on the weekly chart. Looking here at that past high, somewhere around 965 to 967, right in there, or an outside of 982. That's this rising phase right there. Then as you get into this mid-September period, you get into where that influence from that period of risk starts to set in, and then you worry about what would be when you would start to get the influence of those longer term patterns to be pushing to the downside. The way that I will know that will be wherever this anchor point is or low. After this rally, can it break down and get below that low? Will it hold the positive momentum, or will it go to negative momentum? This period in here will tell me about those conditions. Right now, the conditions positive. Let's look one more here as we look at the the daily momentum conditions using a different version, a different way to see the slim ribbon right in here. Now the slim ribbon is a free indicator that you can get on multiple charting platforms. So I really want to encourage you, not all of the platforms give you the area charts to look at like this is, but it screams at you. And when you're in a green area right over here, and our level 4 study, the slim ribbon PO, gives you these arrows, it's telling you momentum is resuming to the upside, that the market is still strong. Here's where it turned negative and gave you the signal that the market was resuming to the downside, and you see how valuable that was. And look what's going on here as it just turned up again, and it tells you momentum is super strong. So this is, these are continued reasons to believe right now, if a decline comes, it will be relatively shallow. It won't last long. And again, we're looking into this time window between 9.6 and 9.12, 9.13 for this corrective process to end. Just like this did right over here, just like this one did right over here, and then each of those followed by higher highs. That's very, very likely what we're going to see in here. If you get a break in here and it's a little deeper and you get a rally and you can't get up to the high and then you get a break again, it will scream at you that the peak is in. But in the meantime, we have to look at it being positive. In the beginning of the show, I talked about speaking to investors and the crazy valuations and what the risks are, and speaking to traders. And right now I'm speaking to traders, people that have holding periods of days to weeks, and this is all positive. Take a look here at the 2-hour, and here's one more indicator in here, which is the market condition indicator. And when it crosses up over the 25 right over there, it is positive. And you can see that gave you that positive signal, and the market condition remains quite positive looking at that. This is a 2-hour look at the slim ribbon, and if you use these combination of indicators right over here, you can see just looking at that here's where it gave you the positive signal right there. And if you're an intraday trader using this for your position sizing or directional bias in here, this is just screaming in here that you have this upside powerful move, and you would want to make sure that you were on the long side during those periods. So that's a look at this grid right in here with our proprietary indicators, which just gives you a fantastic way to look at this. Matt has a variation of this that he gives to our level 4 members, and if you're a level 4 member and you want this particular grid, I'll be glad to send it to you. Those of you that are potentially going to be new level 4 members, then you can ask for all of these grids. Also, we make them quite available to everybody. So that is a good look at my analysis of the S&P 500. Again, short term, intermediate term into September, looking like a pullback coming and then a pretty good rally. But then further out, intermediate term, late September, October into early November, there is a lot of risk over there, and I don't know what the size of the decline is going to look like, but I'd say at least 9%, 12% or more based on what I think the conditions are out there. Overall, looking at valuations and many, many other factors that I think are going to negatively influence the stock market. All right, so that was a look at that. Now, I want to bring in some very important information as we look at our market conditions monitor. This is a phenomenal application for our level 3 and level 4 members. The Pro goes to level 4, and you can get a great sense for market conditions in here. So I'm just going to scroll this down and get a look here at the indexes in here. And this is the intermediate setting. So you can see based on what your interest level is, where you're interested. Are you an intermediate trader, for longer term holdings? Are you short term, looking at a number of weeks out? Are you near term, which is for like swing traders over a few days, or intraday? This is where you get fantastic information. And using the Notify right over here and downloading our alert app, you can get alerted on all of these conditions in here. So you can see in here for the intermediate term, the SPY is very bullish. And we showed you those conditions that are showing that it's bullish. The QQQ, the NASDAQ, is only slightly bullish. And this came from neutral to slightly bullish on 8/20. So the last 10 days, the last week and a half, trading weeks, have been at slightly bullish. Now you get very bullish for the IWM, which has really turned strong a week ago, and very bullish for the Dow, which is way back to August 16th when it gave you that intermediate reading. So let's just take a look here at the short term, because most of our viewers are very interested in the short term. And you can see in here what we have in the short term is kind of neutral conditions, as we've seen the stock market consolidating sideways, not able to move up because, well, valuations and resistance, and not able to move down because, well, there's buyers out there and momentum is strong. So that fights against each other, and you get neutral conditions. The money is flowing from the big caps into lower caps, mid caps, value, and that's why these are only neutral. But when you look at IWM, it's bullish. So this is kind of a tip-off to you that if you're a trader, you really want to look at this all day long and say, well, which are the ones that are bullish, which are the ones that are bearish, and get a good idea. The Dow stocks, made up of a lot of value, is very bullish, and that just turned very bullish in here yesterday from bullish. So, and then on the right here is the change log, and it tells you about all of those things. Let's look at the trade setup conditions for a lot of other things in here. And let's just look at maybe the top 5 or 7 in each one and get a sense for what we see. So here we look at here, let me just scroll down a little bit for you to see. This is a look at the ones that are very bullish in here, looking at the short term. XBI, Walmart, utilities, Goldman Sachs, XLB, CIBR. Those are ones that are showing up as very bullish in here. And let's take a look in here. In a moment, I'm going to look at the intraday, and you'll be able to get a good sense for how to use this. And you can see these stocks that are in the very bullish category right over here. And now let's just switch this up and look at conditions here that are very bearish. And you can see Baidu, Mexico, LVS. Now, the gaming stocks are reviewed. The hotel gaming by RV in the beginning of the show. So go back and watch that, and you'll see why LVS is bearish. Natural gas, we know, is bearish. BDO actually is showing up as bearish here on the short term. OIH, the energy driller stocks, win. So look at, there's 2 of those gambling stocks showing up here, and RV is going to show you why if you watch that in the beginning of the show. If you were an intraday trader and you needed this information, again, you can just look in here and you can see which of these are looking the worst, because again, we're looking at intraday trading for the purpose of trading the rotation potentially. So that gives you the trade setup conditions that are very bearish, and you can get alerted for when these things turn very bearish. And here you could see the very bullish ones that you see in there. So UUP is the dollar for intraday is now turning up. You can see that. JP Morgan, Uber, Oracle, these are ones that are bullish today, and soybeans actually having a good day, as you can see. So that's how you get that a great sense using this. So again, I'm going to go back to the short term here and just give you the trade setup conditions for the short term for the different indexes. You can see Apple there is bullish also. It's the first stock that comes in under that. So that's a look at the ranking systems. It gives you a good sense for how you can use this and really understand the market conditions for different time frames. There's nothing like this out there. This is phenomenal. Again, to get the pro version and to be able to get the notifications that get sent to your desktop, become a level 4 member. Take that special. Now I want to look at the ranking system. This was developed and managed by RV, developed by RV and I early on, which I thought was very important. It looks at our 84 top traded symbols, the symbols that I know everybody pays a lot of attention to. And what we have in here is the different conditions: long-term, intermediate term, short-term. The intermediate term reflects the conditions of the intermediate cycles. And then we have the algorithms giving us what the outlook is, as you could see right in here. So Apple right now is slightly bullish. And it says that the technical indicators suggest that it's nearing the end of its rising phase. That's why it's P1 yellow, near the end of a rising phase. Short term still positive, and the OBI option bias indicator is positive. These are key reasons to believe that it is still positive, but nearing the end of its positive run. Now, if you wanted to get the weekly chart or the daily chart, you just click on these things right there, and it opens that up for you, and you can get the charts. That's all in there on this rankings system. One of the key things I want to show you is that built into the option bias indicator is a reading when something is at an extreme. And we have some people that have this just for this reading. that look at it. And you can see in here that when it's N3, these are stocks that are very bearish. And if you wanted to direct your option positions, this really helps you a lot. Outside of some anomalous things that happens or an earnings report, some news event, this really helps you stay in the right direction for option positions. And you can see in here what the market outlook is for these stocks. And again, Win is showing up right over there. Boeing, which is a neutral strategy that Katie shows you early in the show, is very bearish when you look at that. So I hope her neutral strategy has the proper timing in there as she discusses that. Now let's look here at the positive OBI and those stocks that you want to have your positions to the long side. And you can see that right in here. This is a level 3 or level 4 application, so I really encourage you to, especially if you're an option trader and you want to get the OBIs right in here. If you're a short-term trader, you can click on short-term right here, and it will tell you the short-term conditions as you have it sort there. Now, what I want to show you in the OBI that many people subscribe to level 3 just to get this are when there are P1 or N1 readings. There is a volatility condition that's built into the OBI. This uses multiple time frame and volatility conditions in the algorithm, and that tells you when something is bullish or bearish, or because it's reached a real extreme. In this case, you see XLI is bullish overbought. And the conditions favor a potential short-term correction in a positive intermediate condition. This just reads it so well. Here you can see the Great British Pound, GBP, is in that condition also, and the US dollar versus the Canadian, is showing you that it is an extreme. Now, often there will be a lot of P1 oranges or N1 oranges in there, but right now there is only those 3. And that's a very, very good way to understand when it's time to fade a market with a decent risk reward. Not perfect, of course, but really good. Or if you want to know when something is super positive and you should bias your positions to the long side, well, then all you have to do is go here and look for those P3 greens right there. If you want to know when you should bias to the short side, go here and look for N3 greens. And those are the ones that really tell you the ones that are quite negative. You can see oil showing up there, heating oil, natural gas, all of those, and Boeing, Baidu, Disney, Win, Lite crude, all of those are telling you that your option positions should be biased to the short side. So I wanted to share with you the rankings so you could get a good look at that. There are, if you go down here and scroll, you'll see there are 84 symbols in there that includes all of the well-known different symbols that you might want to trade, the best option traded ones, and that this is just an amazing broad way to look at some of the absolute best stocks. There's your ETFs showing up right over there, and there is SPX, as you can see, RUT, and those showing bullish at P3. So those are in there. Also GDX, of course, bullish P3. And favors long side bias, and that's really, these algorithms are just so good the way they were built in there. So I wanted to show you the ranking system also, as it gives you this great sense for especially how to trade in a rotational market. And you get, between the cycle analysis I just shared with you, looking at the market condition monitor, looking at the ranking system, wow, do you have a broad way to look at the markets. Again, I want you to go to the top of the askSlim website and click on that level 4 special. There's information there for you to see more, or write to Matt at askSlim.com for more information, and he will be able to help you with All of that. Fantastic. All right, I had a good time bringing this to you. I hope that you found it to be immensely valuable. Go to askSlim.com and explore it and subscribe. Share this with everybody you know. If you're new, sign up for our free Snapshot Lite. Go click up in the free stuff and you'll be able to sign up for that. YouTube, subscribe to our channel, click the notification bell, and do like this video. Give it a thumbs up. On X, follow us at askSlim. And any questions you have, write to Matt at askSlim.com. That's it for today. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been